Good morning. This is Josh Hayes with Hedge Plus, and here is the market monitor for Thursday, August 14th. Well, in the wake of August USDA supply and demand report, the big question is where do we go from here? And there are arguments to be made for going in either direction right now. There's those that say that exports are strong and they'll continue to be strong. We've got even lower prices now with corn and wheat, and still very competitive with soybeans, and that will help offset some of the increased production we're seeing with corn. We have lower ending stocks now for soybeans, so that should tighten things up and it should allow us to rally some more. And then there's those that say the Titan stocks with soybeans are offset by the fact that China is still probably months away from buying, and that the export pace won't be able to be strong enough to offset the entirety of the gain in production and ending stocks we're seeing with corn. And corn, as it drifts down, will basically continue to pull wheat down with it. I think there's definitely some strength behind both arguments. I do think that the export pace will continue, but I don't think that's something that's going to turn the market just yet. I think the overall fear, the massive number, adding in 2 million more acres on top of the large jump in yield, I think is too much to overcome for now. I think we'll continue to drift lower without anything to change that dynamic. I do think that exports will take a big chunk out of that number, bigger than perhaps is on paper right now as a projection. I also think that even the yield will be eventually below 188.8. I think the USDA did that with a thought in mind of better to overestimate what's going to be a big crop, no doubt. Well, better to overestimate it and potentially thus spark more sales and exports to get rid of the massive crop rather than to underestimate it and not spark more sales and then have a massive glut at the end of the year. I think if they're going to err in one direction, it's not helpful at the moment, but it would be more helpful to err high and allow us to potentially rally in the spring like we did last year. So, and with beans, I think we are capped a little bit. There's some technical traders and argument to be made that soybeans are doing some things on the charts that prime them to break out, possibly even as high as 1080. And if we got to 1080 and we went beyond, sky's the limit. But I think what we're going to need to do to take big next step with beans is to have that deal with China finalized, which unfortunately probably won't come until the end of the year. But then, yes, when that happens, I think we will have that surge with beans. I think the surge we've gotten now for soybeans is about what we'll get for the time being. Definitely positive. At least we got a surge somewhere. But U.S. weather remains favorable. There's not too many issues. There's some dryness popping up in Ohio River Valley and to the east. But for the most part, weather is continuing to be good here, both in the United States and around the world. So I think we're kind of going to settle in around the ranges we're at right now, potentially drift a little bit lower. Soybeans have at least tighter ending stocks to offer some support and not give back too much of the gains we saw on Tuesday and since. But everything else is going to take some time. Taking a look at the weather, mostly good, dry in the Tennessee and Ohio River areas for the United States. Ukraine and southern Russia, very little rain in the forecast. That is stressing their crops, not to the level that it's causing any kind of projection decreases or anything yet, but definitely drier than they'd like it to be and a potential issue down the road. India, central areas that get heavy rain and flooding, mostly away from crop growing areas, though, so not too much fallout expected from that. In France and parts of Europe continue to be hot and dry. It is testing their dryland crops. Again, not something that has moved the market too much. That's been an issue ongoing for a while. Taking a look at international cash prices, you can see U.S. corn is the cheapest. Beans, we have risen up a little bit over what Argentina is sending out. Argentina is obviously somewhat limited by how much they can send out, but this is an illustration of what happens when we see the kind of rally we've seen with beans. Suddenly, we become a little bit less competitive. We're not the obvious buy. We're not the bargain buy anymore. We go any higher, and that gap widens, and our product becomes less attractive. So it's kind of gets to the point of any kind of rally right now is going to be limited because we start to get too high, and that advantage we've had and we've had for a few months now of such low prices goes away, and then the export pace will start to slow down. So I think that's one of the reasons why things are capped for now. We have to work through the current inventories and get things tightened up and get things tighter than people are expecting at this point with the massive corn crop, and then that's when we'll get some relief and some rallying, and then obviously with beans, the next big rally I think will come once that deal with China is finalized. Still the lowest price wheat. Unfortunately, wheat demand around the world is lower than can be helpful, and definitely have still too high of ending stocks projected for wheat. But the good news about these prices is the wheat exports should continue, and maybe at the end of this, we'll finally have tightened up the supply enough with the wheat market to get some kind of considerable rally. Taking a look at the overnight, down across the board. This put this in perspective from where we were a couple days ago before the report was released. Corn at $3.94 this morning is down about 10 cents from where we were pre-report on Tuesday morning at this time. Soybeans are up 39 cents. They were at this time on Tuesday morning just below $10, and wheat is down about 5. Do think this is going to be kind of the pattern going forward. I don't think soybeans are going to give back a whole lot of the rally that they saw, but also don't think that we're going to challenge any kind of summer highs that we saw when we were up in the 1070s with soybeans. I don't think we're going to go up there just yet, and we'll have to wait, like I said, with see what happens with China. But I think we're going to be in kind of a flat period for a while. We'll see what comes with exports. Definitely need export numbers to continue to be strong, and that should help offer some support so we don't go too low into harvest. But we definitely need that to continue. That will be it for today. We will have Jason's Feedlot Focus out for you tomorrow. Have a great week, everyone.